Well, it looks like Wall Street gave a big middle finger to Palantir by once again not including it in the S&P 500. I mean, why are they doing this? Why do they continue to screw with us as investors? And more importantly, what does it mean for the stock? So I'll give you the truth about all this and exactly what it means for the stock. And guess what, guys? That means some of you guys are going to be a little bit mad at me, but that's okay. That's exactly why you're here, to get the truth without the hype. So just make sure you like the video if you like getting the truth without the hype and having smoke blowing up your butt and talking about how Palantir is going to be at $200 by the end of the year and just all the ridiculous stuff that's out there. You guys are here for the truth. That's what we're going to get today, and it's not always pretty, unfortunately. All right, so let's kind of get into the takeaways from all this, exactly what it means, exactly what matters more importantly, and how it kind of affects the stock price. And I'll let you know what I'm doing as well because of them not getting included in the S&P. So number one, modified sports draft. All right, kind of flow with me here and just kind of stick with me here till the end here. It'll make sense. You could also kind of say it's a modified kind of Hall of Fame type induction as well. Kind of follows the same exact logic line there. Now it's basically like a modified sports draft or Hall of Fame, induction or whatever every quarter or so. But the biggest difference, and the reason why I kind of call it modified, is they're not trying to project who the big winner is in the future per se. So obviously when you're doing like a draft, you're hoping to draft the best player that is going to do the best for you in the future. Obviously you're hoping you're drafting the next Michael Jordan or somebody like that, the next Tom Brady, who they got in the 6th round. But anyways, nonetheless, that's what you're hoping to hit. That's the reason why I say modified, because they're not hoping to hit that. They're just looking to put in, hey, everybody that kind of meets this criteria, who's next to go in? And the reason why I also kind of compare it to a draft or kind of a Hall of Fame type thing is because we don't know what gets said in the war room per se, right? Like we don't have any, we can see what the criteria is and we say, oh, hey, my stock meets that criteria. But that's it. That's kind of all that we get. We don't know what happens in that war room. We don't understand, hey, what's the logic there? We don't know at the time how many stocks are coming out and how many are going in. We don't know a lot of that different nuance there. Are they looking for these type of stocks or these type of stocks? Like we just don't know all the different things that go into it, more importantly. And then secondarily, just because I don't like CrowdStrike, for example, I don't have any opinion on CrowdStrike, I'm not following it all, but let's just say I didn't like it and I like Palantir better. That's irrelevant in those rooms when it comes down to it. Not only because, well, they're different people and they're not necessarily following the stocks the same exact way we are, but we don't know how the deals go in there. We don't understand kind of the standing rules per se of the committee. We don't have access to any of that sort of stuff. So kind of like the draft where your team drafts a player and you're like, why did they draft him? Why didn't they take this other person? And you kind of course, afterwards, maybe it comes out, maybe it doesn't in some cases. It just kind of depends. But nonetheless, it's kind of secret. Like we don't know until after it happens why it happened. In this case right here, they just don't release what happens in the war room later on after it happens. And after we get the list of names there, Hall of Fame, after we get the list of Hall of Fame names, sometimes there's a guy, well, it was the last chance to get in there. This other guy here is just as deserving, maybe even more deserving. Well, he's on his first try in there. So they put the guy in who's on his last try this time in that final spot. And the next time, this guy who was deserving that time, there just wasn't an extra slot available for him, will get in the following year there. That's kind of the reason why I kind of threw in the Hall of Fame example as an example here of what could happen there in regards to this. But no matter how it kind of goes, kind of think of it in those terms and in regards to it's not necessarily a referendum on who's the best or who's going where, whatever the case is. And we don't have access to the information like we would normally have with a lot of other decisions that go on in regards to stocks. That was kind of the best example I could give for kind of the lens to view this through and to kind of try to make sense of what's going on when we don't have actual, data, actual minutes to kind of point to kind of figure out what exactly happened there. Number two, $22 is the focus now. All right, look, you guys know I don't put a lot of stock into TA. I don't do a whole heck of a lot of it. I'm not saying it's not valuable. I'm not saying it doesn't have a place. It's just fundamental analysis is so much more important than technical analysis for a long-term buy and hold investor. I don't put a lot of weight into it, but I do know, looking at the charts and kind of talking with our chart masters and such, that $22 is kind of that line that everybody, that Palantir, kind of that next level, if they can hold that, we'll pretty much hold firm here through kind of the downturn and be looking forward to that next earnings call to basically see, are we going to get something else in the earnings that can either move the stock up or down, obviously, kind of give us some direction there in regards to what the traders are going to do. Now, if we don't have the $20 line, okay, we're looking at 20 at that stage, kind of being that next, and it's generally around 20, that next support where if we fall through that, yeah, unfortunately, we're going down in the teens. But remember, we are long-term buy and hold investors, and I don't care. Remember, I have it at, the mid 20s or so by the end of the year. So if we're able to hold the $22 line or the $20 line, whichever one, we're still on track to hit that number by the end of the year. Remember where we started the year, basically mid to upper teens starting the year. So we've already had a nice run up in Palantir. I'm still sitting on a nice gain for the year regardless. And what does that mean to long-term buy and hold investors if all these different TA things, they don't hold, these support lines don't hold? What does that mean if we end the year and we're not at that 25 like I thought we would be at? And that's basically a reason why I put that number there, was not because that's what I thought traders were going to do. That none of that factored in. That's where I had fair value based upon the growth rates that Alex gave us for the year. That's where I had the stock pegged. So that just represents fair value. And that to me would be if it ends the year at, $35. Well, I know we're significantly overvalued at stage, in my opinion. If we end the year at $18 per se, as a long-term buy and hold investor, that means one thing only. That means opportunity. I'm not going to care. I'm not going to be concerned. I'm not going to be worried. But the next point is the most crucial of the ones that I'm going to make today, and it is going to make some of you guys mad, or you're going to disagree, or whatever the case is, and that's okay. So number 3, S&P inclusion is not a catalyst. Now hear me out all the way through this so it makes sense. Don't yell at me and just kind of follow me all the way through. And then if you want to yell at me, go ahead and yell at me. That's cool. But at least let me get the whole point out. So yes, traders are going to trade that news and push it up if they were to get included, if that's where the momentum was. Yes, I absolutely agree there. And yes, I think it is very critical and very important to the stock over the long run. And we'll talk about why specifically here in just a second, why it's so important. But that doesn't make it a catalyst, guys. And what I mean by that is from a long-term buy and holder's perspective, not a trader, not anybody else playing any of those other funny games, but as a long-term buy and hold investor, it is not a catalyst. And that is simply because a catalyst for a stock over the long term, in regards to long-term buy and hold investing and valuation, is something that tangibly adds to the revenue or the bottom line profits of the business itself. That is what a catalyst is. So when I look at the S&P, it doesn't add any revenue. There's no contract involved with the S&P, right? You make the S&P, you don't get a contract saying, hey, here's an extra, $10 million for the year. That's not how that works at all. It gives you absolutely nothing. There's nothing with S&P inclusion that all of a sudden makes your margins better. There's nothing that all of a sudden with S&P inclusion makes management more efficient and has them making decisions that magically unlock a lot more revenue or figure out how to make more profit. I mean, the S&P doesn't even do buybacks or anything else like that to where you could potentially manipulate the, earnings from the inside there. It does absolutely none of that. So it is not a catalyst for a long-term buy and hold investor. Now for traders, absolutely it's a catalyst for traders. Just think about that. There were lots of trading catalysts when it ran all the way up to $35 in 2021, just like, Lucid, for example, ran up to $80 or whatever the heck it was. There's lots of catalysts back then, but they were trader catalysts. And the problem with trader catalysts as a long-term buy and hold investor, that's just momentum. That's all that it is. And that's all it's doing. And more importantly, if there's no revenue, if there's no profits, when it gets overvalued like that, like, Palantir did when it was up in the upper 30s or so, a few years ago, it's going to come back down because of valuation. That's what I mean by it's not an actual catalyst for the stock, because it's not sustainable. It is not fundamental to the business itself. We'll talk about the huge positive here in just a second, but from the business standpoint, and more importantly, from the long-term trajectory of the stock, it means absolutely nothing. I mean, heck, even if it gets included in the S&P and it runs to 40 on that news, it is not a catalyst for the stock, and it is coming back down because the fundamentals will not be there and it will support that price at that action. So that to me, totally not a catalyst at all. However, S&P inclusion is huge, massive for this next reason we're going to talk about. So what does S&P inclusion actually do? It does something absolutely awesome, guys. And this is what I love about the inclusion, is it starts to actually stabilize the shareholder base for the stock. And what I mean by that is all those institutions, when you get included, have to buy the stock, and they're not really trading in and out of it like it's being traded right now. So essentially you are taking shares. All these institutions have to buy. Now remember, we talk about stocks being trader controlled. Once they turn profitable, moves more and more towards institutional investors. It's a slow journey, takes a few years. Same exact thing with S&P. It's not like, hey, they get added to the S&P and then the next day, all those funds have to buy it. That happens over the course of months. And in case of some of those funds, even years before they actually do their various rebalancings and have their full positions in Palantir built out. So it takes time, but it stabilizes that shareholder base, because essentially you're taking shares from the pure traders over here and you're moving it over here into institutional hands who don't do a whole heck of a lot of trading. They do some, but nothing like these guys over here. So it starts to stabilize the stock. Now, obviously you can end up in like a Tesla situation where it's just ridiculous all the time. But remember, Tesla's kind of an anomaly. It's out there on its own. The vast majority of the companies that get owned, it stabilizes the stock over the long run, and it creates a more stable shareholder base. And it basically takes it more from trader controlled over here into the hands of more institutional controlled, which again is great for us as shareholders, because that means that you're going to be able to continue to weather the storm per se and not get these wild whipsaw ups and downs in regards to the stock. Basically, it just stabilizes that shareholder base. So what am I doing about this? Guys, this is simple stuff. I am simply following my plan. If you don't have a plan, create one right now, but I am simply following my plan. If they get in the next time around, I'm not going to change anything because my plan already has everything laid out. I don't need to change anything, and it wasn't based upon the S&P and whether or not they get in or not. Same thing if they don't get in. Okay, nothing changes for me. I'm looking at how they're performing on earnings. I could care less about whether or not they get in the S&P or not. It's going to happen sooner or later and be nothing a few months after that. Even for the traders, it's going to be nothing after that. So I'm not worried about anything except for focusing on my plan and valuation more importantly. That is what I'm focusing on, and that is what you need to focus on as well for as a long-term buy and hold investor. Where's Palantir right now in regards to that valuation? How does it fit into your long-term plan? And what is your plan if it runs up, if it dips down, whatever the case is? How many shares do you want? How many shares do you want in the future? All those things factor into what you should be doing with Palantir stock. And that's exactly what I'm doing with Palantir stock on this, I guess, a failed announcement. Since it didn't actually get announced, I guess on not getting announced, I'm not changing anything because it's not critical and it has no part in my plan in general. It's just another stepping stone in the journey of a great stock who's continuing to move up the ranks in regards to being a great company. But I got to see that revenue and I got to see that bottom line profit over there in earnings. That right there is where my focus is. And if you don't understand valuation, you don't understand how to go through those earnings calls, we go through Palantir earnings calls in my group every single time they have it. If you want to see all my buy and sell alerts on Palantir, see my complete watch list with price targets that includes Palantir. If you want to see all that, or if you just want to jump on our $250 portfolio challenge, where I may or may not be adding more Palantir to that challenge, make sure you check out the pinned comment down there and see if a membership's right for you. Because we got 5 courses you can take. We got access to the best 6, 7, and 8-figure Discord out there. We got free coaching you can take advantage of. We got a stock analyzer tool. Guys, we have so much included in the group. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.